Hey, what's going on? Welcome back to the channel. In this video, we're going to be taking a look at EOS. I do want to say that I'm not a financial advisor. You should do your own research before investing money into crypto. Now let's jump straight into the TA. Taking a look at the daily chart, you can see that we have a massive support block here set up between, let me get that, 87 cents and 82 cents. Now, if we start zooming in, you can see that the initial touch here, or the candle closure on November 2022, to be exact, November 9th and November 10th, both closed at 82.5 cents. And that was a pretty important closure because this created this massive support block. Now, previously we have retested this level, but we had only gotten down with a wick. And then we had multiple dips into this area after that. And even in 2023, we did the same thing. Now, what we did after that is very bearish because we dropped below this massive support level. And we've never been this low. If you zoom out, you can see EOS was sitting at very high prices. And we've only been coming down since June 2018. And this is not very good. This is not very good. So we lost this support in June. And right now, what it looks like we're doing is we're coming back up to retest that block as resistance. Since it became our resistance after we lost it, we're going to be retesting it as resistance. Now, let me just change that. And okay. So 82 cents or 82.5 cents is going to be a massive level for us to retest. We could get rejected from the 55 EMA. That is always a possibility. But from a technical standpoint, you're at least going to have a wick to that area and then a retest of the previous support. Now, the previous support, which is this ascending yellow support trend line, is going to hold us for the next maybe few weeks. I do think we're going to lose it at some point. Eventually, we're going to get suppressed by the resistance from above and we're going to get sent back down. Just by looking at the markets are not looking very bullish short to midterm. Actually, to midterm, I would say more bullish because we're going to be looking at an uptrend in September and potentially August as well. So that's something to keep in mind. But short term, I do think we're going to be looking at a pullback before things start getting bullish. Now, this support block here, or this support trend line, is going to be a very good entry point short term for a quick little swing trade if you want to do that around 70 cents. If we start dropping below that, what you can do is you can start targeting these local lows. So this would be 66.5 cents. And we also have a local low here that we printed back at the start of the month, I think, in the middle of the month, and this was at 62.5 cents. So these two levels are going to be your important support zones, and if you start dropping below this trend line, so below this green trend line, the yellow support trend lines should hold you. If we start dropping below that, we don't know what our 1.618 target is going to be because we don't have a local high, so we can't really print a fib, right? So let's say the high is going to be 82 cents. Just let's theorize here for a bit. So 82 cents is our high. We retest the block. We have our swing high. We have our swing low in June as well. The 1.618 target is going to be sitting at 53 cents. This is going to be your 1.618 target based on this fractal. And you might get there in July, you might get there in August, and then you can start retracing to the upside. I don't know, but this is only going to be possible if we lose this low, obviously. So this, by losing this low, we're creating a new technical target at the 1.618 here. Otherwise, this is not our target. So 53 cents is not our target unless we drop below it, below the first fib level here. That's something to keep in mind. All in all, we're pretty low. This is a good buying opportunity in my opinion because we've never been this low on EOS's chart. So if you're bullish on the project, now is the time to be investing. Taking a look at the daily RSI, you can see we've had quite a retracement from the oversold. Now, once you're below the index of 20, that's when you should be looking for entries, or sorry, below the index of 30. as you were back in May 2023 and this month in June as well. These were two good buying opportunities. Before that, we dipped briefly into the oversold in November last year, in June last year, in May last year, in January last year, and in December 2021. So every single time you dipped into that area, you had to move to the upside. So let me just set this up as a nice support block. We've been retesting this area quite a few times since December 2021, and historically this is a very good buying opportunity. Now let's switch over to the weekly chart. And before we continue with the video, I quickly want to mention my Patreon that's linked down below in the description. If you enjoy my content, you want to get more exclusive content, and you want to support me at the same time, definitely feel free to check out the Patreon, because you're going to get a 7-day free access on my Patreon and an instant access to all of my content since October 2021, which is when I started. You'll get access to content like exclusive weekly podcasts, and we're starting to invite guests already. We have 40 plus low cap gem posts. We have a bunch of project reviews. We have a bunch of resources that are going to help you save time and make more money with this upcoming bull market. So this is definitely a great exchange of value for the both of us. And once again, there's a 7-day free trial. Feel free to check it out. You can leave anytime, and let's continue with the video. Taking a look at the weekly chart, we actually have some trading range or some trading history in 2017 at these levels. So I was mistaken when I said that this is uncharted territories. I take that back because we are in a different chart right now. This is the total history, obviously, so we have more data. Now this would be our support block. Moving forward, we're going to be targeting this as our major support level below. Let me just drag this to the east here. There you go. And we've entered this support block already, actually. You can see. Let me make sure that I have that on point. I don't. Let me make sure. There we go. So this is going to be our massive support block between 70 cents down to 51.5 cents. This is the block that we need to be targeting for entries. It's okay if we start retracing or consolidating in this area for a bit before we eventually start moving to the upside. That's very possible, and I wouldn't mind doing that, honestly. But you can see that we're also in this sort of channel down pattern, and until we break the resistance, we are going to be expected to adhere to the channel's resistance and support. So that means after you have a bounce off of the support, you're expecting a move up to the resistance, a bounce off the resistance, after that a move back down to the support, and so on and so forth, until this chain of events breaks. So once we have a break to the upside, we need the volume indicator to confirm that breakout. So we need volume to start coming in, just like we had some volume here in 2020 and in 2021. Otherwise, that's just going to be a fake out. 90 or 9 out of 10 times when you have a simple breakout with no volume, you tend to come back down below that resistance once again. So that's pretty much what we have on the weekly chart. We're getting rejected from this yellow resistance trend line. This is our September 2022 high that we need to break. Otherwise, we're just going to be printing these lower lows and lower highs. Once we break above that, that's going to be a strong indicator. So this is going to be another block that we can take a look at for future reference. You can see we did have a backtest of support here in February 2022, and then we had a retest of resistance in September 2022. And once again, this level is a pretty strong support that we've been retesting since December 2018. We broke below, and then we had the backtest of support, which is exactly what what you're supposed to do when you lose a support level. And zooming out long term, we have this massive pink trend line, this descending pink trend line. We want to break above that. That was what sent us down in April 2018. In May 2021. So potentially once we start running up into that level, we get to $4.75 roughly, we could get sent back down in September 2024. But obviously that's if that would be a bearish scenario, because if we print another lower high, then I don't think we're going to be seeing $23 the next bull market. So we need to break above that trend line in 2024 ASAP. And that's pretty much everything, guys. Let me know if I missed out anything on the charts. Actually, let's take a look at the weekly RSI as well. So we are jumping in between a support and a resistance here, and right now we just had the last bounce or the latest bounce off the support, and we're starting to move to the upside. So with a retracement into August, September, we could run into that resistance one more time, just like we did back in April 2022, in September 2022, and in March 2023. So if you're looking for swing trading, or you're looking to enter for a short period of time, this could be your opportunity to do so. And I do want to point out the fact that we have a bearish divergence, and this is probably the bearish divergence playing out because you have a lower high and you have a higher high on the RSI. So the price action has a divergence with the RSI chart, where the RSI is printing higher highs, the price action is printing lower highs. That's a divergence. Taking a look at the weekly stochastic, we are below the index of 20. This means that we are oversold and we are good to start accumulating. And this is usually a solid indicator to look at. The last time we were this low was back in December 2022. And as you can see, since then, we've had a nice 50% move to the upside. So if you're looking to enter for a short-term trade, once again, that's a good entry. If you're looking for long-term, this is really good as well, because this is our local bottom here. We're approaching our 2017 October bottom, which is pretty good in terms of buying at low prices, but you definitely don't want to be losing that. If you lose that, you know, we can start dropping pretty quickly. And that's pretty much it for this video. Let me know if I missed out anything on the charts. I'm going to see you in the next one. Take care and goodbye.